And this is going to be a very transformational week, or at least next 10 days for the cryptocurrency industry. And it's another indication that we need to do things a little differently, and we need to think about things a little differently. It is very difficult to know how deep these tentacles go. And it's entirely possible that other firms that were reliant upon FTX could also fail, similar to a 2008 financial crisis style event after the fail of Lehman Brothers and the threat of the failure of AIG.
Cryptocurrencies across the board dropped sharply on news that troubled crypto exchange, called FTX, filed for bankruptcy, and Sam Bankman, the CEO, left the company. This event caused Bitcoin to plummet into the 15K range, causing a huge panic in the crypto community. In this video, Charles Hoskinson, the founder of Cardano, will share his thoughts of the recent events, more importantly, how much this escalation can do harm for the crypto industry as a whole. In his words, the fall of Luna, Celsius, and now recently, FTX, presents a gap in the crypto world that can lead to very serious events in the future. Before we jump to the clip, please don't forget to like and subscribe to the channel if you enjoyed the content. Now let's see what Charles has to say.
It looks like what's occurred is that FTX was, through a series of transitive relationships, closer to what occurred with Luna than people let on. So Luna, as many of you know, when it collapsed, created a cascading series of failures for things like Three Arrows Capital and others, and it's created an enormous amount of instability in the market that the market is still attempting to digest. There's an asset called Alameda that had a relationship with FTX, and that asset apparently got a bit too much value, and it's created a liquidity problem for Sam's empire. And it may be the case that, and more will be discovered soon, that he's insolvent and as a result requires a bailout or acquisition, basically a shotgun wedding to continue operations. And if he doesn't get that bailout, that there's a good possibility that his FTX will go out of business. It'll get liquidated. Now, my firm, we had no involvement, exposure, or connection to any of these things, so we didn't lose any money. Cardano doesn't have any dApps or DeFi that really touched anything related to the Luna ecosystem or the yield products that were very popular but highly unstable in the Ethereum ecosystem. So effectively speaking, this does not directly impact the Cardano ecosystem. But as members of the broader cryptocurrency space, this will likely cause issues for all of us. In particular, there is the case that FTX has been lobbying very heavily in Washington, D.C. Their failure could change the political landscape in unpredictable ways. It was my belief that a red wave would occur today, and early indications of the election are that that is the case, with just to the magnitude of it. And based upon that magnitude, it was my belief that legislation would pass that would be inspired from things like the Stab Now proposal from the U.S. Senate, things like the Financial Innovation Act, and so forth.
As of recently, Binance stated that it will no longer seek to acquire FTX. This is bad news for crypto industry, as it is possible that this event will start a cascade of similar events that will further damage the crypto market. Also, the big question is, will we see more regulatory action to control this chaos, as it is clear that company crashes, similar to recent events, cannot be happening on a regular basis. Let's see what Charles Hoskinson has to say about that.
The issues here are that should we see more systemic failures, there could be a belief for more regulatory scrutiny or more draconian laws to be passed to enable that scrutiny. The failure of FTX could result in that, which could in turn more badly damage the industry, and in many cases offshore the American cryptocurrency industry. So this is not a minor event. This could become a very significant event, and it's the last in a series of failures that we saw started by Luna. Luna led to Celsius and other such things, and now we're here. It's just an example of the excesses that I repeatedly warned people about in 2021 and all throughout this year, and prior points in my career, like in 2017 with ICO mania. You don't get something for nothing, and extremely high yields tend to evaporate very quickly. And this is no different from that. Just because the asset classes change and because we use new and emerging technology, in no way, shape, or form somehow indemnifies us from the risk that this new technology has. And yet, for some reason, financial engineers, entrepreneurs, and startups seem to think that this time will be different. There is no substitute for hard work. There is no substitute for discipline and every month building and creating utility and getting real adoption. But tech stocks are another example of this. The majority of tech stocks in the United States and abroad are significantly down. In some cases, many are over 90% down, which is quite sad, given that they had enormous valuations just a few months ago in some cases. And so the crypto industry is just a microcosm of a macro trend that we've seen over the last few years of rampant asset inflation. So it's hard to know what's going to happen next. If the Binance acquisition goes through, there is a possibility that the markets could stabilize and that things will look good, or at least calm, and we can move on and continue to heal as we were doing before this event. If the acquisition fails, there is a possibility that a series of cascading failures will occur, and because of a lack of transparency, it is very difficult to know how deep these tentacles go. And it's entirely possible that other firms that were reliant upon FTX could also fail, similar to a 2008 financial crisis style event after the fail of Lehman Brothers and the threat of the failure of AIG. And this is going to be a very transformational week, or at least next 10 days for the cryptocurrency industry. And it's another indication that we need to do things a little differently, and we need to think about things a little differently. We have a situation where cascading failure could occur in the markets, and it's unclear how likely that scenario is. It just is based upon the level of transitivity of connections, leverage, debt, and other factors with FTX, and if FTX gets a bailout or not. Now, this might be isolated to certain asset classes, and it may be isolated to certain financial institutions that trade and deal with crypto. But it certainly in the short term could have a significant impact on cryptocurrencies in terms of market stability and predictability.
That's it for today. What do you think will happen to the crypto markets? Will we see more regulations, more company collapse, and will the market sustain such FUD? Drop your thoughts down below in the comment section. Don't forget to leave a like and subscribe if you enjoyed the video. This was Investalence, and we'll see you in another clip.